All right, guys. So welcome to part two of the market structure series. If you haven't watched part one of that's a basic market structure course or series, you will just find it in the description somewhere around, around the screen. So go watch that. Without further ado, we'll be getting right into the course. So hey, get your pen, get your paper, and get ready because I know this is going to be something that will be so beneficial to you. So let's get right onto it.
Okay, welcome to the Advanced Market Structure with Multi-Timeframe Analysis, free series, part two. So this is, of course, the part two of, a two-part course. The first one was a basics of market structure. If you haven't watched that, I think it should be in the description, so you can just click the link and watch it because that's going to give you a lot of foundation with respect to what we're going to be looking at today. So you're welcome one more time. So today on the advanced market structure, the whole idea of looking at market structure, the market structure gives you, the sort of clarity that you need to understand, how price action, how price moves, and also helps you to improve, your strike rate in the market because you know where to look at, you know what to look out for, and you know how to execute when you really understand, market structure. And then additionally, when you're able to bring all the time frames together and build a story for executing, trades. So today, starting with, what market structure or multi-time frame analysis really is. So it's just about, analyzing different time frames and, with the aim of getting an informed picture, bias or perspective as to the current or future price action. So typically you would start, this would normally start, maybe at the, from the high time frames. So the weekly, the daily, the medium time frames, the 4 hour, 1 hour, and the 15 minutes, and then lower time frames, the 5 minutes and the 1 minute. Depending on how you look at the market, some persons will consider 4 hour, chart to be, or time frame to be, a higher time frame, right? So, however, it really just depends on how you view the market and how you utilize this in your trading. So a typical 1 hour, 1 weekly candlestick would comprise of about 5 daily candlesticks, Monday to Friday. 1 daily candlestick will comprise of about 6 4-hour candlesticks, and then 1 hour candlestick will 1 4-hour candlestick will comprise of about 16 15 minutes candlesticks, and a 1 15-minute candlestick is going to comprise of about 15 1-minute candlesticks. So when you look at the multi-time frame analysis, usually it starts from the monthly and then the weekly and daily, and then 4 hour, 1 hour, 15 minutes, 5 minutes, and then 1 minute. Now, multi-time frame analysis simply speaks about, a sort of top-down analysis where you start from the higher time frames to develop, maybe a bias or a perspective as to where the market is going to go or where price action is going to go. So you start from the, the higher time frames, the weekly or the daily, and then you go down to the 4 hour, the 1 hour, and the 15 minutes, the medium time frames, and then to form maybe an intraday perspective as to where price is going to go. And then you go down eventually to the 5 minutes and the 1 minute, the lower time frames, to look for opportunities to execute your trade. Now, at ParutoCapital, we begin our analysis on the, the higher time frames to develop a perspective and a narrative, and then work our way down to the medium time frames, to have an immediate intraday bias, and then, the lower time frames for timing our trades and our execution. I just want to say that please, if this video or the previous video, you've watched on this channel is really beneficial to you, please do not hesitate to just hit that like button, right? Hit the like button, hit the share button, just leave a comment somewhere in the chat section. This would help, to boost the video, improve the, the viewership also, and just be beneficial, to anyone who comes across, this video. So please do not hesitate to just do that. Just hit the like button, hit the subscribe button. We really do appreciate your support. Okay, so now let's talk about how the market moves. So the market really moves in a sort of up and down, up and down, up and down, up and down pattern, right? So we have an impulsive move typically, and then after the impulsive move, you'd always have a pullback or a correction, and then an impulsive move or a run, and then another pullback and correction, and then an impulsive move, right? That's how price moves, right? So whether it's in the Forex market, currency market, or it's in stock, the stock market, nothing really goes up forever. There's always, that up move and then a pullback and then down move and then a pullback, and then it just does that over and over and over again, right? So the rally up, the rally can be called, a run or, an impulse, right? Then the pullback, some persons might call it correction, is just the same thing. The most important thing is understanding, the concept. Now, when you see an impulsive move on a higher time frame, for example, this type of move from here, right? When you see this type of move, on a high time frame, it's usually, a trend on a lower time frame, right? That's just something to note, and we're going to see that shortly. Now, on the market, multi-time frame market structure again, like I said, a lower time frame trend equates, a higher time frame impulsive run, right? So you can see here that the white lines, denote the higher time frame. So you can see the move on the white lines. You can see how this is an impulsive move, a pullback, an impulsive move, a pullback, an impulsive move, a correction, an impulsive move, a pullback, and then this does nothing, doesn't take out this high, and then changes, character here. You can see this came down here, pull back up here, did not take out this high, and then broke this structure here, and this is a change of character, right? You already know that. So a change of character, we expect it to pull back a little bit, it pulls back a little bit, and then continues the move downwards. Now, what you need to observe here is that you see the impulsive move on the higher time frame, but on the lower time frame we have a trend, literally up down up down up down, and just continues like that. So on the lower time frame you have a trend, but on the higher time frame that would just look like an impulsive move. So typically it will just be like a daily candle, one large daily candle, a bullish candle. But that when you look at a bullish daily candle, you have on the lower time frame, maybe the 4 hour, the 1 hour, the 15 minutes, the 5 minutes, the 1 minute, you have a lot of trends, that produce that one large bullish candle on the daily. Right, so lower time frame chalks are also important pointers to indicate that the trend is about to either maybe slow down or the trend is about to continue. And what do I mean by that? Look at this move here. This was an impulsive move, correction. This is an uptrending market, no doubt. You can see that, right? We're going up, but then you notice that when it came here, there was this change of character here, right? So this is telling us that this impulsive move up, this trending bullish market is slowing down and it's about to change character to the downside. And then that's what happens, right? It changes character and pulls back a little bit, continues, and then pulls back a little bit and then continues, right? Now that's how the market literally works. Now let's look at the concept of strong and weak highs or lows. So basically I have emphasized earlier, runs on the high time frames are trends on the lower time frames. So you can see again, the white lines, the higher time frames, and then the orange lines in the lower time frames. But there's also something to pay attention to. So you can see price came here, pulled back a little bit, and then took out this previous high, right? So this low that took out this high is called a strong low. And why is it a strong low? Because it did its job. It took out this high, so that's a strong low. Now this becomes a weak high because it was taken out by this strong low. The same thing continues, a pullback and then a break of structure. This is also a strong low because it took out this weak high here, right? And then a pullback again and then a break of structure. This is also a strong low because it took out this weak high here, and then it comes down here and then up and then it broke structure. Now this becomes a strong high because it took out this low, right? A change of character. So this was the high that took out this low, so this becomes a strong high and then this becomes a weak low, and then it continues like that, pulls back again and then breaks structure. This becomes a strong high, lower high, and then this becomes a weak low because this strong high took it out, so that becomes a weak low, and then it continues like that, right? Okay, so now on the the basis of market structure, there was something you'd always encounter, or that I always emphasize, and that's the change of character. Now the change of character simply just tells us when the trend is about to change direction, right? So of course this in your trading should always be used in confluence with other indicators, indicators in terms of course price action, liquidity, supply and demand, premium discount and all of that. So you have here anyways on the chart, so you have this impulsive move and then a pullback and then a break of structure, as you can see here, right? And then we have this minor pullback here, and then it continues, and then a change of character, as you can see here. So telling us that this move up is slowing down, right? Because there's a change of character here to the downside, and then we expect this to pull back here, respect this zone, because this is a strong high that took out this weak minor low here, right? So this is a strong high, so we expect a pullback, but we don't expect it to take out this zone here, and then we expect a continuation, and then it takes out this, and then we expect a little pullback, and then it continues like that. Now, something you would observe is that price doesn't always have to come back to maybe a zone, right? So you can just, after a break of structure, we always expect price to pull back, but the price doesn't have to come in here. It may come, it may not. So we have an expectation that price should come in here. I would always want to see price mitigate, our zone before we even look for entries. But I won't be going into details, of course, of the entries, here. I'll touch a little bit on it just shortly. But we expect price to always mitigate the zone before we look for maybe an entry, to continue maybe the pullback or the trend. So this continues, and then we see that this price comes into the zone here, right? So this is the major, break of structure that happened here. Now we know that this is a protected zone because it took out this high here. So we expect price to go up and come back into this zone and continue the movement up. And surely that's what we have. So price came into this zone here, and then we see it moved back, and then a change of character showing us that this internal pullback is slowing down, and then we're now ready to make continue the trend as we had here. So it changed character and then pull back again a little bit, and then the move continued. So this is basically how the change of character informs us that the trend is about to change. Either maybe a rallying market is about to slow down for a pullback, or the pullback is over, and then the market is about to continue its previous trend. So the change of character is a very important concept, that I think you should take note of, right? Okay, so let's look at the expectational order flow. Now you can see that the white lines are the 4-hour, denote the 4-hour, chart, as you can see. And then here, when there's a change of character at this point, because the 15 minutes, pull back and took out this low here, that's a change of character, and then a little pullback on the 15 minutes, and then it continues, and then a break of structure, a little pullback, and it continues. You'll have here a break of structure, and then that continues. But we know that this is a protected zone. And why is it a protected zone? Because price came back here, down here, and then from here it broke structure, right? So we know that this is a protected zone, so we expect price to come back to that zone, respect it, and then continue going up. But to understand how, of course, this works in the real market, so the white lines are the 4-hour the 4-hour candlesticks, and then this bluish, somewhat bluish, I guess, denotes the 15 minutes candlesticks. As you can see, this is the 15 minutes, you're having lots of trend within the 4-hour, and then you have all of that movement, and then it comes down here and then changes character. So we know that now price is ready to make a move to the upside. So what do? We wait for price to come back again into our demand zone, and then for that to happen, you see the 1 hour also was now trending up and down, and then came there, and then the 1 hour changed character. Now with this, the 1 hour switched bullish, the 15-minute has switched bullish, and now we know that every all roads point to the continuation of the trend. So we expect now with this change of bullish change of character here on the 1 minute, we expect price to pull back again into our zone here on the 1 minute, and then we take that trade and we target at minimum we target maybe a 15 minutes supply. No, we target a 15 minutes maybe supply zone, or we can even target the 15 minute previous or the 4 hour rather previous high, and then hopefully we take it out, and then that is how you trade this. So the expectational order flow concept is to say that because the market is trending up, we expect the market to continue to trend up. So eventually we expect that this will be protected, and then we expect that all of the zones will also be protected, and then when the market does its thing, and then you have this expectational order flow that the market is going to always obey market structure. All right, now let's look at this even with more much more in-depth or much more depth rather. So here you have the bullish versus the bearish order flow, and as you can see here, the market rallied and then pulled back, and then rallied again. A break of structure happened here. We know that this is a strong zone because this was the zone that pushed and took out this weak high. So we know this is a strong zone. Now the market came down here, as you can see, but while the market was pulling back, you can see here that the market was always, after change of character here, it pulled back into the zone and then continue downwards and pull back again into the zone, and then continue downward and pull back again into the zone and continue downward. Now that is a bearish order flow, right? So we know that this is a bearish internal order flow, of course, and then it comes into this zone, respect our zone, pull back up, did not take out this high just yet, and then you had a little pullback, right, respecting the zone still, and then it broke structure here. That was a change of character, right? So this is a chalk and a flip, right? And why is it a flip? Because price came into the zone, price didn't do anything, it flipped, and then a change of character. So that's why it's called a chalk and a flip, and then the order flow continues. It pulls back into the zone, continues up, and then that continues like that. It pulls again, and then that just continues like that. So this is a bullish order flow. So essentially this is how market structure really works with respect to price action in the market. And when you understand this, you begin to think about taking out all the indicators and just focus on understanding market structure, because market structure, I tell you, it's always and will always be king. All right, so look at this example again. So the fractal expectational order flow, a high time frame run is a trend on lower time frame. I have emphasized it severally. So you see this move here on the 4 hour, and then a pullback, right, and then a move here. This becomes a strong low. This becomes a weak high because of this break of structure. So we know that this zone is going to be protected, right? So we see that price, did its thing, changed character here on the 15 minutes, and then continued, respecting the order flow, the bearish internal order flow, comes into the zone, and then what happens? It changes character again. So we know that now the market is ready to move up. And then what happens on the 1 minute? We go to the 1 minute, and then wait for price to come and mitigate the 15 minutes demand zone, and then when it comes in there, we look for a chalk, and then we see that maybe a chalk and a flip, or just a chalk. So we see that flip, and then what happens? We now expect price to pull back a little bit here and then continue the uptrend, right? So this is basically our bias on how we look at the order flow. So we expect that the higher time frame runs will produce trends for us on the lower time frames, and then we leverage that to execute trades according to our plan. Now it's very important that you understand that the price price action is fractal, and when you understand this, it's going to literally be a game changer for you with respect to how you view the market. Now let's look at another one. So market structure is always king. I so believe this. Market structure is always king. These patterns repeat themselves over and over and over again. And the more you understand market structure, the more you'll be well grounded to always be on the right side of the market. So you won't be caught on the wrong side of the market, taking trades in the wrong direction, when you should be taking it in some other direction. When you understand market structure, this will become super, useful going forward. So that is that, for that. So we have the 4 hour, upward move, the 15-minute change of character, and then the trend internal, order flow. You can see that it comes into that zone and then it continues again. And then all of that just continues, and it just continues to move, right? So it just continues to follow, price, what price would do. So price will do whatever it wants to do. So whatever happens on the high time frame, must have already happened on lower time frame. I showed that earlier. So the 1 minute switch, bullish here, the 15-minute switch bullish here, and that will now provide, us with the opportunity to now continue our bullish 4 hour trend, right? So for the bullish 4 hour trend to continue, that bullish, switch must have happened on the 1 minute and also must have happened on the 15 minute, right? Okay, so now let's talk about managing bias and mastering market direction. Now, the market will do what it will do. You can never say for certain, oh, I know what the market is going to do and the market must do what I want it to do. No, that's only going to hurt your psychology. Now, you may have your strategy, you may understand market structure. You have to be patient with it and also understand that the market can choose to go any direction. It doesn't matter, how much you spend time doing analysis. The market can just decide to do anything. But the goal of trading is not to, hang all your psychology on just one single trade that goes wrong. It's rather to allow your edge to play through. You map the market the same way, you analyze charts the same way, and you've tested and back tested it, and you can see that you have an edge. All you need to do is just focus on executing your edge, and your edge will always play out. So here we can say we have this structure, a break of structure here, a change of character here. It continues downward, break of structure. And then here we now have a change of character that signifies the pullback is already over. Remember, the price came into this zone because it's a protected zone, because it took out this previous high, so price couldn't really do anything. So it respected that, changed character, and then boss continued, and then it came back into this zone here where we now have the 1 minute and then 1 minute change character, as you can see here, and then we have a new zone here. Now price comes in there and then begins to go up and then comes down, and then price can just go up like this, which is our expectation that price needs to do this so that the bullish trend that we have around here, right? So we have this bullish trend that started around here can continue, right? So we expect that price will do that. However, price can do whatever it wants to do. So price can just come in here and then just go down and take you out. You followed your structure, which is the most important thing. So a loss really means nothing. If you followed your plan that you've back tested and you understand how it works, a loss is literally nothing. You look for the next one, the next setup, and you execute without hassles. So the market works in probabilities. It's very important to understand this. When you know this, you have peace. It doesn't matter, that you took a trade 1, 2, 3 and it's a loss. What matters is that you have an edge, and you know that if you follow your edge to the latter, you will win, always win. Then please follow your edge, right? Now, do not try to predict the market, right? Simply react or simply respond to what the market is showing you based on your plan. Don't say, oh, I think the market is going to go this way, and then you execute your based on how you think. You're just going to end up blowing, your account, or just hurting yourself. So you must stay flexible in your bias and analysis. You've done your analysis, but you must always also stay flexible. And the bottom line is that, you must stay neutral and super flexible when actually trading. Trading is going to demand a lot, in terms of your psychology. How you think is going to challenge your thinking. But if you're willing to stick and really get your acts together, get your psychology right, get your strategy right, get your execution right, and get all of these things right, I can tell you that you definitely succeed. All right, so let's look at a little price action. So here we have this price action here. We're also going to look at this on the chart. So you can see the price came down here, pull back up, and then broke structure. As you can see here, pull back up a little bit, broke structure again here, as you can see. Pull back up here, and of course change character, and then we expect that price will come into this zone. It pulled down here and then broke, and took out this high again. Our expectation will be that price will also now come into the zone and do the same thing. But you can see price came into that zone and they just pushed it down. So price can literally do whatever it wants to do, right? So, and then we can have this, up move here and then down move and then up move. You change your character, a change of character here, and then we have, you know, an expectation the price will come into this zone, and then it does that, comes back into that zone, pushes up, and then we expect that price will also come into this zone. It does that, comes into that zone, and then pushes up again. We expect that price will come into this zone, and then does the same thing, comes into that zone, and then pushes up again, right? So this is essentially the flow of the market, you know, how the market flows, you know, lower highs, higher highs, and all of that information. When you have this, you know, nailed, you'll begin to see how your strike rate is going to improve, and your understanding of the market is really going to improve beyond and above anything you know, you can think of. So you must be able to, you know, utilize the market structure to spot also fake outs, and to really just ensure that you're trading, every trade that you take is informed based on, you know, robust technical analysis and price action, right? So before we, you know, I would just want to hop onto the chart, and then we just show you, we just speak to some charts, and then we continue. Okay, right. Let's just do something much more practical. So anyways, for those of you who might not be familiar with this, this is called TradingView. So this is a charting software that I basically use for my analysis. Okay, so well, so this is the daily chart. I have the daily chart here at the top, and then I have here the 4-hour chart and the 15-minute chart, and then the 1-minute chart. So let's just analyze this. So on the daily chart, you can see obviously that the market is trending downwards, right? This is very clear as day, right? When you look at the 4-hour chart here, if we're to zoom, you know, to zoom out, so you can also see that 4-hour chart, of course, you know, has been, of course, trending downwards from what you can see here, right? Of course, there seems to be a change here, which we're going to see shortly. But then you can see basically the movement of market, right? How that has been moving for some days now. Now let's do some, you know, some drawings on the chart. So on the daily chart, let's draw this. So you can see here the market came down, made a high here, and then pulled and broke structure here. So it took out this low, and then you can see that this was the move that took out, you know, this previous low, right? And then the market pulled back again and then took out this low that was formed here. So we can draw a line there. Let's do that. Right, so we see that, and then it pulled back a little bit when it came down here, pulled back a little bit, and then took it out again. So we can also draw another line here. So that's a break of structure, and then it continues, right? It came down here and then made a new you know, low, and then pulled back a little bit and then broke structure again, and you know, basically continued its bearish move. So we can put that there, you know, and then it continues, and here again the market, you know, made a low here and then pull back up and then broke structure again. And then what happens? You see that? So this was the high, and then it broke structure, and then it seems the market now started reversing. Okay, so this is the daily chart. So we know from this that this is a bearish trending market. If you have to look at this, so if you just look at this was the high. It broke structure, made another, you know, lower high, and then broke structure, made a lower low, and then another lower high, and then broke structure, made another lower high, and then, you know, broke structure, made a lower high, and broke structure. Now, what do you observe here? The market basically trends or moves this way a lot of the time. Of course, it trends, you know, either trending bullish or trending bearish, and sometimes it ranges, right? By range, I mean sometimes you just see the market like moving in a certain range like this, right? But most of the time, of course, you might see the market, you might see, you know, you'd experience trending markets a lot of the time. Anyway, so you can see that. So from here, we see that what happens, the market here made a low here and then pull back up here, but then doesn't take out, you know, the previous demand zone, this low, and then it made a new higher high, right? It broke the structure here, right? That wasn't the best of drawing. So it broke the structure here, it took out this high, right? So that simply tells us that the daily chart has changed character, right? So in terms of our expectational order flow, we know that we're not looking for, you know, shorten opportunities majorly, right? Based on the concept of, you know, change of character and break of structure. So seeing the change of character in the daily, so we're expecting that the market is going to pull back a little bit to this demand zone and then continue upward. And exactly as you can see, that's what happened. It then breaks structure again around here. Excuse me, right? So this is basically how the market moves, right? Now let's analyze this on the 4-hour chart. Okay, so on the 4-hour chart, on the 4-hour chart here, as you can see, I have that here on this side of the screen. So you can see on the 4-hour chart, the same thing also was happening. So by the way, all these lines I was drawing, you can observe them. You can see all of them showing up here, right? So on the 4-hour chart, we also had the same thing, something similar, right? So now, mind you, a move on the daily, right, is a trend on the lower time frame, right, on the 4-hour chart. So the daily is a higher time frame compared to the 4-hour chart. So a single move on the daily, it's a lot of trend on the 4-hour, and that's what we see here. So you can see the market here, pull back up and then broke structure. You can also take note of the position of the cursor. You can see it's also showing the same position on the daily and also on the 4-hour. So it took out this low, right, this broke structure, and then it pulled back up again and then broke structure, and then it pulled back up again and then broke structure, and then it continues like that, right? Now with this, let's look at something. So this is of course on the 4-hour. So you know that of course this was a downward trending market, but then let's look at how the 4-hour changed character. Now if you remember during the when we're going through the slides basically earlier, I did mention that of course a trend on the higher time frame, or rather a move or a run, an impulsive move or a correction on the high time frame, of course, is a trend on the lower time frame. Now on the lower time frame, basically you can see a lot of movement compared to your high time frame. So let's see how the change of character, the first change of character really happened on the 4-hour, right? So let me take that out. Now you see this was the low. If you also take note of the position of this on the daily chart, you see on the 4-hour chart, this was the low, right? And then what happens? Now this was the high that broke this low to form this new lower low. So but you see this was what we had, and then this pulled back a little bit up here and then returned, or pull back, right? It didn't take out of course the high, and then return, and then what happens? Then it takes out this high that was formed here, telling us that of course now there is a change of character on the 4-hour. If we're to draw that, I'm going to draw that from here, right? So this is what we're going to have. So this is basically telling us that there's a change of character on the 4-hour, right? And if you look at the daily chart, you can also see where that is on the daily chart, right? So that's a change of character. Now what you'd also take note of is that before you have a major change on a higher time frame like the daily chart, it must have happened on the lower time frame. So the 4-hour, the 15 minutes. So the 15 minutes, the 4-hour must have changed character before you even see that on the daily time frame, right? So anyways, you see that here. So you can see a lot of movement here. If we're to zoom out and then look at the candles, exactly what we have here. So you see that. Let me just add something here. So this was our low on the 4-hour, and then you had this move up here, and then it pulled back a little bit, and then it broke structure. So with this, we now know, because of this move here, this move and then pull back and then this break of structure or change of character in the 4-hour, we know that this becomes our new low, right? So we mark that, so that becomes our new low. So we know that this was our high. This is now a new low because it broke this previous high, and then this is now our new high, right? So we can also mark that point, right? So we can continue to do this, and then it pulls back down again, and then respects of course this zone, and then forms a new low, right? And then it breaks structure again to go form a new high over there. So we can just mark that, right? So you basically see how the market moves, right? How the market trends, basically, and how it also changes character from a bearish to bullish, or from a bullish to bearish. So let's look at this move. Let's just draw using this tool. So this was a move, and then it returned, and then it broke structure, and then it returned, and then it broke structure, and then that's how it continues. Now we're around here. So we know that because this is a bullish trending market, our expectation is that the market will continue to trend bullish. However, the market, of course, can decide to do whatever it wants to do and change, character from being bullish to bearish. If it takes out this low, for example, then we know that, okay, if this happens, then we know that the market is about to change character, and then our expectation is there to pull back a little bit into this zone here and then continue downwards, right? So that's our expectation. However, we know that, of course, on the daily chart, the market has already turned bullish, so we're expecting that bullish run is going to continue, but it doesn't have to, right? Okay, so enough said. Now, this is a 4-hour chart. So let's look at how this translates to the 15 minutes chart, right? So let me just take this section. Let me just take it from here. Now, obviously, you can see on the 15 minutes here, the market. Let me just zoom this out. So you can see that the market, of course, pulled back. This was trending downwards on the 15 minutes and then trending upwards, and then it reversed. So let's just expand this 15 minutes and then we just look at, possible entries and what it's going to look like. So here we have, so this was like November 22nd. So we can see here, this was a massive move downwards, right, on the 15 minutes. And then what happens here? The market, made a low here, made a high here, made a lower low, and then what happened? It broke structure. So let me draw from here to this body of the candle. So, and that move that fueled, the break of structure, this was the low that fueled that break of structure. So our expectation is that the market, after breaking structure, will pull back into the zone, but it does not have to. It doesn't have to. But also we have other zones. So the market pulled back a little bit up here and then pull back, and then before it broke structure, we can draw other zones, something like this. And then you can see it came in, tapped in here and broke structure. And then what happens after it breaks structure? So we know that now the market is trending bullish. Our expectation is that after it breaks structure, it will pull back into this demand zone before it continues, the upward movement, right? So you can take the range, you can take, the last candle down and all of that. So let's just take this range. So we have this. Now the market, pulls back in here, and then our expectation is that it's going to continue upward. So let's see if we're going to see an opportunity here. So I'll just play this candle back. So let me just take this out. So now, good. So we have this. So we've seen, of course, a change of character. We've also seen the break of structure. So what do we expect? We expect the market to pull back into our demand zone, and then we look for an opportunity to trend, to take the trade rather, and push it higher, right? So let's see what we get. Okay, so we've tapped into the zone. So I'll just go into the 1 minute. Okay, so this is a 1 minute. So I'm going to now look for, an opportunity on the 1 minute to see if I get an opportunity to take the trade to the upside. So let's see. Okay, so good. Okay, tapped into the zone. I've now seen what I'm looking for. Good. Now I've seen something. Let's see. So here you can see that the market came, tapped into the zone, pulled back a little bit, danced around, came here, pulled back a little bit, and then tapped into the zone again. And then here you can see it pulled out. So if I'm to draw this, I can see here from this candle, okay, it really didn't give me an entrance. So this was, a move, not really a reaction I'm going to take. So let's see. Okay, so let's go. Good. Now I have something. So you see here from this high, right? If I pull this across, you can see that the market came here, tapped into that zone, that previous high, pulled back a little bit, and then, pulled out again. So let's see if it's going to break out, take out this high here, and then we're going to have, an entry. Okay, good. So we see here that now it has taken out this previous high on the 1 minute. Okay, so based on how I enter the market, now because I've seen this, I've seen a flip, it has tapped into, mitigated a 15-minute zone, and I see here it pulled into, the 1 hour, the 1 minute, supply zone, and then there's now a supply to demand flip, right? So there's now a flip. So it pulled into that, tapped into it, it flipped, and then, broke structure. So what I'm going to do, I'm going to draw, this tool here and take, this last move downwards before it broke structure, and then I'm going to take that whole candle. So with this now, my expectation will be that now the market is going to come back into this zone and then push up. So let's see if that happens, right? So you're going to take something like this, right? This is just an example of, how potentially going to trade this, right? So let's say with this. So with this, I know that at least I'm going to aim for, this high at minimum, right? Or a fixed maybe rate, whatever it is that, you trade, or however it is you trade. So let's see what happens. So if we get tapped in, okay, so let's see. Good. Ooh, we got tapped in. Yeah, you can see that we got tapped in. It moved out and then took it out. So let's see what really happened. Okay, so it came back again, into the zone. which is okay. So let's see if we get an opportunity to take this out. Okay, so nothing really here of interest so far, except it takes out this high. So let's see. Good. Okay, so we have something here. So I'm going to draw this. So this was the high, right? You can see that the market, came in here, made a flip, and then, broke structure. It took out the high by a week, which is okay, based on how I trade. So I'm going to draw, this last candle that went down, and then look for an opportunity to take this, up. So let's see if we get an entry, right? So this, let's see if okay, I think something happened here. So this was too fast. So this was the candle actually broke the previous high by the week. So for me, I'm okay to just take that. So this would have actually already tapped me in, and let's see if it just continues, and then bam, there we go. There we go. And then let's see. Okay. Yeah. Let's see when it hits. Taking a while, returning. Okay, this is a 1 to 7. So let's see if it's gonna give us an entry or it's gonna take us out, right? Okay, this is already late in the day, but yeah, good. So anyways, it still went and hit, our target, I believe. Yeah. So I think, yep, it hit the target at about 1 to 7, right? So yeah, so basically this is how to look at the market. So you remember where we started from. We knew that the market was trending up, right? It broke structure. So we expect that the market will pull into this zone and then give us a move out. So the first attempt we made, that was a loss, which is perfectly okay when it comes to trading. But we saw a pattern, we saw a setup, and then we took the trade, which is perfectly okay. Our stop loss, of course, was tight, and then it took us out. But then we looked for another one, and then we took that. You can see here, you don't panic. If you have your set zone, and of course your psychology is intact, you wait for your setup, for your TP to be hit, and then you take your trade. And basically this is how you look at the market, and this is how you trade the market. So I hope you learned something from this, and you have a lot to take home based on all that we've looked at. All right. Okay. All right. So yeah, I want to believe you actually draw a ton of lessons from the walkthrough. Now the most important thing you have to draw from this is this: consistent actions, consistent setups, will lead to consistent results and success. Trading is an art, right? And you have to understand, the intersection of profitability and probabilities in the market. From the trade I took, you saw that the first setup, ended up as a loss, but the second one gave us, a win, right? So you must understand that if you map the market correctly, the same way every single time, right, eventually your edge is going to play out, and then you would have success, right? And then what you just saw was how to go, from a higher time frame, from the daily to the 4-hour to the 15-minute, and then to the 1 minute, and execute your trade. And you have to look at that, how I map the market, the same way every single time. If you don't see your setup, you don't take the trade. If you see your setup, you take the trade. So this basically is just to emphasize, that, the weekly, of course, gives you a very long-term bias. We didn't even look at the weekly, but the daily also gives you, a long-term bias. It's a higher time frame, and then the median time frame is the 4-hour, and then the 15 minutes gives you an immediate bias, and then the 1 minute gives you, your trade entries and your execution, right? So a few important questions you always want to ask yourself. One is, what POI, is the daily, likely to turn? On the daily, you're looking at what POI is a 4-hour likely to react to. On the 4-hour, you're looking at what POI is a 15 minutes likely to bounce from. And then on the 15 minutes, you're looking at what intraday POI is worth considering for trade entries. And on the 1 minute, you look for your setups, like we saw, the flip and the chalk, and then we took the trade literally. Now, hopping across time frames without sticking to specific schedule would only hurt your trading. So you have to find your mojo, and you have to stick with it, right? Now you have to sharpen your edge, and that's what ParutoCapital aims to provide for you. How to sharpen your edge how to short of the market and get an unfair advantage, in the market. So literally everything you need to become a successful, consistent, and profitable trader. We have the monthly memberships that is really affordable, for you. Now you get access, of course, to the full stock in profit course. You have, access to see how we take minimum of 1 to 5, RR trades, and the full access to trading floor, a systematic and mechanical approach to trading, pristine clarity, on what trade setups to look for and to take, exclusive access, to ParutoCapital service, easily pass funding challenges, and of course, an opportunity to also become, financially independent. The reality is that's a reason why you're here, right? And then you can also go from 0 to 6 to 7 figures in funding and even more. All this is possible when you find the right methodology and you're able to stick with it and have and inculcate that discipline into your daily routine, to see the success you want to see as a trader. So you have access to the course, the trading floor, and ParutoCapital service. All of this, at an affordable, cost, right? And at an affordable price, literally, and you get all this benefit. So hey, what are you waiting for, right? There's literally, I think, nothing that should be holding you back. You would see, of course, some coupons in the description section, that you should utilize, to get, discount when you check out and also when you decide to join. So imagine how your life can change if you have the discipline to stick to your plan. Most traders don't have even a plan, not even talk about the discipline to stick to a plan. Imagine if you're confident in your setups and you traded mechanically, no emotions. You just look for something that that should be there and you take it. Let your edge play out. Imagine if you had access to funding and you could have 5% 10% return on maybe 300k, 200k, what that could mean for your life. Imagine you could trade from anywhere without going to an office. Imagine you could also eventually quit your 9 to 5. Of course, not immediately. It's going to take some time depending on your own commitment. But imagine if you could do that. Well, that is what Paruto service, ParutoCapital is going to offer you. And our goal is to help bring those dreams to reality. So I've said so much and I don't want to say so much again. So just, do the needful. Just in case you haven't subscribed, please make sure you subscribe. Make sure you hit the like button. Make sure you also, support us, share, and leave a comment. Ask questions, and hopefully we'll attend to those questions. So this is me to you, and this is me saying, hey, I wish you all the best and I wish you success. And I look forward, to sharing more with you and to also see, to hear more of your success, as a trader. So thank you so much for listening, and I wish you all the best.
All right.
Bye.
So with this, I want to believe, you've been able now to, deepen your understanding of the market, the structure of the market, multi-time frames, combining different time frames to really, put together your story on how to trade the market. So my hope and my belief is that you utilize this, in your trading, and you would begin to see the result instantly. So hey, to your success, I wish you all the best.